This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Thursday, August 6, 2026, and this is the New York session. Now, let's get into it. Bitcoin is holding its breath at $64,003, while the broader crypto market grinds under the weight of an extreme fear score of 14 out of 100. We have a market paralyzed by institutional withdrawal and punctuated by a singular, defiant rally in Cardano. Let's look at the data. Before we dive into the charts, here is what is on the economic calendar affecting our session. Today brings three key releases: initial jobless claims, productivity and costs, and wholesale trade data. While these are macro staples, remember that right now, crypto is pricing an idiosyncratic risk rather than general inflation expectations. The disconnect between equity calm and crypto panic means these prints might struggle to move Bitcoin unless they signal a sudden shift in the Federal Reserve's stance on rates. Still, they set the background tone for liquidity availability. Here is the snapshot as of 8:04 p.m. Eastern Time on Thursday, August 6, 2026. Bitcoin sits at $64,003, down 0.5%. Ethereum is essentially flat at $1,903.55. But look at the breadth. XRP is down 3%, Solana down 1.8%, and Avalanche down 3.2%. Meanwhile, Cardano is up 7.5%. Total market cap is roughly $2.279 trillion. And in the background, the VIX is resting at 16.50, while the crypto fear and greed index is stuck at 14. That is a massive divergence. Turning to the news flow, the headlines shaping this session are heavy. Cointelegraph reports that Iranian crypto outflows have spiked 700% following U.S.-Israeli airstrikes. That is a direct supply shock entering the system. Meanwhile, CoinDesk notes that the U.S. Senate housing bill now includes a CBDC ban, adding a layer of regulatory ambiguity. And finally, Cointelegraph highlights that Bitfinex is reviving tokenized bonds, targeting crypto-native yield seekers. Let's get a read on how these headlines are impacting the tape. The headline about Iranian outflows explains the extreme fear reading perfectly. When you have a 700% spike in supply from a sanctioned region, the market doesn't know if that liquidity hits spot orders or OTC desks, so sentiment defaults to panic. But look at Cardano. Despite this geopolitical noise, retail sentiment around Cardano is decoupling completely. The community is celebrating a 7.5% gain, while the rest of the board bleeds. That isn't just noise. That is a concentrated burst of retail hope in a desolate landscape.
Hope is dangerous when the VIX is sitting at 16.50 and equities are sleeping. You're seeing retail chase Cardano, but the broader risk profile is screaming danger. The divergence between the calm equities market and the panicked crypto sector means we aren't dealing with a broad recession scare. We're dealing with structural fractures. The CBDC ban news adds to this confusion. Traders don't know if privacy is being protected or if stablecoins are getting squeezed by association. That uncertainty is what keeps the fear index locked at 14.
Let's dig into Bitcoin. It's at $64,003, down 0.5%. Grid, we see Bitcoin dominance at 56.62%. Is this strength or weakness?
It looks like strength on the surface, but I'd argue it's a trap. Bitcoin is holding at $64,003, barely off its open, but the volume isn't there to justify a breakout. The key metric here is the 24-hour high of 64,916 versus the low of 64,114. We are grinding in a very tight range, with futures demand at 2024 lows. There is no leverage backing this hold. If that 64,000 integer breaks, we don't have institutional buy walls to catch the knife. The dominance is rising not because capital is flowing into Bitcoin, but because it's fleeing alts faster than it's exiting the space entirely.
Grid is looking at the price, but I'm looking at the flows. The reason that support feels fragile is because Bitcoin futures demand has collapsed to 2024 lows. There is no leverage left to defend the 64,000 level. Meanwhile, we have this 700% spike in Iranian outflows. Where is that coin going? If it's hitting centralized exchanges, it's suppressing the bid side. And on top of that, PayPay, a 40% owner of Binance Japan, is seeking a $1.1 billion Nasdaq IPO. That is a massive liquidity drain from the Asian crypto ecosystem. Capital is leaving the building, not defending floors.
So the technical support is thin and the liquidity is draining. What about the outlier? Cardano is up 7.5% at 20 cents. Pulse, is this real momentum? It's real attention, yes, but let's check the context. Total market cap is down 0.43%. Bitcoin is down 0.5%, so Cardano is up nearly 8 times the market average. Social sentiment is overwhelmingly focused on it right now, which drives volume. But look at the other metrics. Link is up 0.5%, Litecoin is up less than 1%. This isn't a sector rotation. This is isolated. The community is buzzing about potential upgrades or local partnerships. But without the broader market lifting, this is a lonely peak.
And that loneliness is the risk. When one asset runs hot while the rest of the market is in extreme fear, it often attracts profit-taking from everyone else. Cardano is trying to prove it's a safe haven, but safe havens usually look like Bitcoin, not high-beta smart contract platforms. If the Iranian supply shock accelerates, Cardano's rally could reverse just as quickly. It's a liquidity trap for anyone believing the narrative shift without checking the order book depth.
Let's pivot to Ethereum. $1,903, down 0.2%. It's holding up better than the high beta names. Grid, what do you see on the Ethereum structure?
Ethereum is trading at $1,903, with a 24-hour high of $1,916 and a low of $1,891. It's tighter than Bitcoin. The key here is the relationship to Bitcoin. Since Bitcoin is struggling at $64,003, Ethereum is providing the beta play. It hasn't broken down like Solana, which is at $72.63, or Avalanche, which is struggling at $6.45. But notice the dominance. Ethereum is at 10.08%, while Bitcoin is at 56.62%. The gap is widening. Ethereum is lagging. If Bitcoin loses that 64,000 support, Ethereum will likely drop harder proportionally because it lacks the digital gold narrative holding Bitcoin up.
I agree on the lag. Look at the staking flows. With the CBDC ban news floating around, there's increased scrutiny on Ethereum's role as settlement layer. Institutions are hesitant. The stagnation in Ethereum price reflects a wait-and-see approach. They aren't selling aggressively yet, they're just not buying. Compare that to Cardano, where we saw active buying interest. Ethereum is in a holding pattern until the regulatory clarity improves.
Solana is down 1.8% at $72.63. High beta assets are clearly taking the heat. SPECTER, is this the beginning of a deeper correction in Layer 1s?
Look at the VIX again, 16.50. Equities are fine, but in crypto, Solana is bleeding, and Avalanche is down 3.2%. This tells me that risk-on capital has simply abandoned these assets. The 2024 lows in Bitcoin futures demand mean the big funds aren't using leverage to prop up these chains anymore. They're letting them float. If Solana drops below its 24-hour low of $72.55, we'll likely see accelerated selling in Avalanche and Polkadot, which is down 2.6% at 82 cents 18. It's a cascade effect. The extreme fear index isn't just a number, it's a reflection of this capital flight.
Moving to XRP, it's at 1.04, down 3%. Ripple's legal history usually provides some insulation, but today it's acting like a risky growth stock. CIPHER, any specific flow data on XRP?
No specific on-chain alerts for XRP other than the general exchange inflow pressure. The 3% drop aligns with the broader market cap decline. It seems XRP is being used by traders to hedge against Bitcoin volatility, but without a specific catalyst, it's just drifting lower. Interestingly, XLM is also down 3%. Stellar and Ripple are both suffering from the same headwinds. This suggests the sell-off isn't project-specific. It's systemic. Traders are raising cash, and they are doing it by trimming everything except the absolute anchors.
Let's look at the broader picture with ApeX. We have Bitcoin holding tenuously, Cardano rallying alone, and a flood of geopolitical and regulatory news. How do you synthesize this?
Okay, let's connect the dots. Pulse highlighted the social decoupling of Cardano, and Grid correctly identified that Bitcoin dominance is rising not due to strength, but because alts are bleeding. CIPHER pointed out the dual pressure of Iranian outflows and the pay IPO draining liquidity. SPECTER warned about the VIX/fear divergence. My synthesis is this: we are in a liquidity vacuum. Institutions have exited via futures, CIPHER's data, leaving retail to manage the spot market. The Iranian outflows, 700% spike, are filling the void with supply, keeping prices down. Cardano's rally is a localized reaction to community hype, but without institutional futures support, which are at 2024 lows, it has no ceiling. The market isn't crashing, it's freezing. And frozen markets can snap either way, but currently the weight is down.
So no crash but no liftoff either, just a squeeze.
Exactly, and with the VIX at 16.50, external forces aren't helping. If equities stay calm, crypto continues to digest its own internal problems. The CBDC uncertainty, the supply sharks, the lack of leverage. Watch for a break in Bitcoin's 64,000 area. If that goes, the freeze ends. If it holds, we stay in this narrow, fearful grind.
All right, let's wrap this session. Here are the 3 key takeaways. First, Bitcoin is testing critical support at $64,003, but with futures demand at 2024 lows, there is little leverage to support a bounce. Second, Cardano is bucking the trend with a 7.5% gain, but this appears to be isolated retail enthusiasm rather than a sector-wide rotation, especially given the 30% drop in XRP and Avalanche. Third, the macro environment is contradictory. Equities are calm with a VIX at 16.50, but crypto sentiment is in extreme fear at 14, driven by geopolitical supply shocks and regulatory ambiguity. Tomorrow, watch the initial jobless claims and productivity data for clues on broader liquidity, and monitor if Bitcoin can sustain the 64,000 level. Until then, stay cautious. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the after-hours session where we will see how these calls play out. Until then, trade safe.